So I said,
Check down my bag. Check down my bag. You see one look.
I said
Black bag.
to map out true structure or the advanced way to map out structure is by understanding the concept of liquidity. And I said there's three types. There's three types of liquidity, which we have inducements. We have inducements, engineered liquidity, inducements, engineered liquidity, and structural liquidity.
Structural.
Inducements, engineered LQD, and structural
Liquidity.
LQD, liquidity. So I said we have three types of liquidity, which is inducement, engineered liquidity, and structural liquidity. But we are not going to touch, we are not going to go into, we are not going to go deeper any of them. We're just going to focus on inducement liquidity in respect to mapping out true structure. And I said, this is the basic way of mapping out structure, higher highs and higher lows. But when it comes to understanding the true way of mapping out structure, you need to consider inducements. And I said inducements is the first or recent. Inducement is the recent or last low or high of price. Now, this area here is the last low of this our basic. What's wrong? My computer. I think I'm running so much this thing. So I said this low, which is the recent one, is our inducement in this basic structure mapping out concept. You understand? So if you want to map out true or advanced structure, we need to consider price coming down to take this area first.
Yes.
Price coming down to take this area, then pushing up. Before we can mark this area out as our higher high. So we cannot take these areas as our higher high until price clear out their recent low. Same thing for a downtrend. If price does not take out the recent high, then push down to the downside, we cannot consider this point as our lower high. Understand? So this is understanding inducements in respect to mapping out structure, true structure map out. Understanding inducements in respect to advanced structure. Now, we've already explained this. I'm just brushing up on this. So let's just go to the 4 hour and just map out structures. Let's just map out structures in some time, in some pairs, and in some time frames. Let me use gold will be better. We used silver yesterday. Gold will be better. So on gold, okay, if I'm to map out my structure from this, starting from this side here, this is our recent low, which is the inducements. which is the inducement, price came to take out the recent low. Then this is our higher high, because this high here, this high here is responsible for taking out this low. So this is our higher high. Then this is our lower low. Sorry, this is our higher low. As price has broken this high, this becomes our low, our higher low. Then we saw price coming back to take the recent low, making this place our new higher high. Then price pushed down. This is our higher low. After price broke this area, this high, this was our previous higher high.
Okay.
So after the break of price, we get to see price coming down again to take out the recent low, making this place our higher high. Then after price coming down, and we saw a situation whereby price came and take out the previous high. This becomes our higher low, and after price took out this recent low, this becomes our higher high.
Yeah.
Let me just make it clean. So are you seeing? So based on our structure mapping out, this is what price has been forming: new higher highs and new higher lows. We're expecting price to push down, to go to the upside. So in this case, yeah, like I said in the first video, in this case, this leg, all these legs they are our impulse. They are our impulse because price is trending to the upside. I see. Price is trending to the upside, and price keeps creating impulse, correction, impulse, correction, impulse, correction, impulse. So if you look closely, all these areas, all these areas, our impulsive leg. Then the other is a retracement. But so having these inducement concepts in mind, you get to map out structure the right way. If you are using the normal basic way to map out structure, you get caught up in so many moves in the market and end up maybe taking too many losses because you are not mapping out the true structure of the market. If you are using the normal basic, look at the normal basics, so many moves, so many higher highs, higher lows, higher highs, higher lows. Are you seeing? If you are using the basic, you get to jump in a downtrend, uptrend, downtrend, uptrend, downtrend, which you might end up at the wrong side of the market. So this is the true way of mapping out structure. This is the advanced way of mapping out structure. You need to consider inducement. And what is inducement? Inducement is the recent low or high. The recent low for a high for an uptrend, and the recent high for a downtrend of the market. So we have to wait to see price take out that inducement before we can map out our higher highs and our higher lows. So I think that's that for. Should I still let me analyze, let me still map out lower time frames so that we still get clearer view on what we are. On what we are doing. So if you understand inducements, or if you have the idea of inducements, I think mapping out structure will be easier, and at the same time you'll be at the right side of the market. So let me just use this is the lower. Let me use another pair so I don't get mixed up with so many. Let me just use one.
Okay.
Which pair? And you let's use any. So this is the 1 hour time frame. This is 1 hour time frame. So if I'm to map out my structure there. Structure. Let me use from this leg here. So this is the recent slow. This is price came and took out this high. After taking out the high, this becomes our new low. Then price pushed up.
Okay.
And came back. So after taking out this low here, the recent low, you'll get to see price push up. Now in this case, I think I'll explain this later in the future, but this is still under liquidity. I told you there are three types: inducements, engineered liquidity, and structural liquidity. Now I said inducements is the recent, right? Engineered liquidity first. Engineered liquidity is the first. I think it should be the first. Or engineered liquidity is the first, and structural liquidity is the overall low or high of the market. But this is what I will explain later in the future, so don't get yourself confused. No need to worry about this, you understand? So in this case, we just saw price coming to take out the structural liquidity. So this is still valid. No need to bother about this. Later in the future, I'll explain.